What's up guys? Welcome back to InvestingPH. Today we are going to evaluate another real estate company and is one of the oldest and the biggest out there, which is Filinvest Land or FLI. Now in the company background, I will also be showing you guys a quick preview of their REIT that will make its IPO debut soon since FLI is their parent company. So without a minute to waste, let's start. Before we start, do press the like button first, would really help out for the YouTube algorithm, and if you haven't yet subscribed to my channel, today is the day you press that subscribe button. Now who is Filinvest Land Incorporated or FLI? It was incorporated on November 24, 1989 as Citation Homes Incorporated, I don't know if that's the right pronunciation for that, and changed its name to FLI on July 12, 1993. It began commercial operations in August 1993 after FDC Filinvest Development Corporation spun off most of its real estate operations and transferred all related assets and liabilities to FLI. It was listed on the Philippine Stock Exchange on October 25, 1993. The company has developed over 3,000 hectares of land into homes for over 160,000 families. They have over 250 ongoing developments in 50 key areas across the country. They are the developer behind landmark projects such as the 52-story PBCom Tower, which is the tallest office building in the country. They have diversified portfolio in the residential business, spanning from mid-rise and high-rise condominiums and townscapes, which spans from different key areas across the country. They have different office buildings. Filinvest is one of the country's largest office space provider with developments in various locations such as Metro Manila, Cebu, Tarlac, and Pampanga. The company continues to explore key BPO locations all over the country. Next is their mall business. Their malls are located in different cities like Makati, QC, Cavite, Rizal, Dumaguete, Pampanga, and Muntinlupa. A quick preview of their upcoming REIT. So Filinvest REIT Corporation is a wholly owned subsidiary of Filinvest Land. They have 17 fully operational Grade A office buildings, which has 90.3% occupancy rate as of April 30, 2021. 88.4% of that is occupied by multinational BPOs. These are their office buildings. First is in Northgate Cyber Zone, which has 16 buildings included. This is located in Alabang. So if you haven't seen it yet, this is an overview of those buildings. Currently, they are constructing Axis Tower 3 and 4, which is estimated to be completed this third quarter of 2021 and first quarter of 2022. Next is Filinvest Cyber Zone Cebu. They have one building here, which is Cebu Tower 1. Currently, they are constructing Cebu Tower 3 and 4, which will be completed in 2022 and 2023. Tower 2, which they haven't included yet, is now operating, which has 46% occupancy as of March 2021. Now, future projects of REITs are a good sign since 90% of income will be given off as dividends. So with projects rolling on, this in the future may produce more income for them, which in turn they will give off more dividends. These are their occupancy rate as of March 2021 for their different office buildings. You can pause this if you want to further analyze it. Now, another thing to look at, Filinvest City is the first commercial business district in the Philippines to receive a gold certification from LEED. Now, LEED is a leadership in energy and environmental design. This is the most widely used green building rating system in the world. So they have 4 certification, and Filinvest City has LEED Gold rating. So this is also good to note down since right now everyone is turning to a much environmental approach. So they are using a district cooling system for their offices. This saves more energy, which in turn is more cost efficient and saves off carbon dioxide release in our atmosphere. You can check their website to further understand this in detail. The link is in the description below. With that said, that's about it for FLI's background and the quick preview of the REIT. Now we go on to their financials. This is FLI's financials, okay? We would still be following our checklist. Do watch my other videos as well to further understand each line of my checklist. First, let's look at their income. Now, real estate companies was one of the biggest hit by the pandemic because of a lot of their businesses was really affected. Mall closures, buildings weren't used because of the lockdown, rents were put to a halt. Anyway, the pandemic really did punch them hard. So this is for me guys, when I'm evaluating companies, especially real estate companies, I don't look at much their 2020 financials because it really affects too much their growth averages. Anyway, let's look at the revenue first. Has a positive growth yearly. slowed down quite a bit in 2016 and 2017, and the really big negative growth for 2020. Now, even with their 2020 revenue, their average growth for 10 years is 9.89%. Quite good. But if we take off their 2020 year, their average revenue growth would be 14.65% for the past 9 years. Next is their net income. We can see their net income growth rate slowed down starting from 2016. Their 10-year average growth rate is only 3.95%. This is with the negative 40% growth rate. So if we exclude that, their average growth rate is 8.90%, which is slightly low than what we want, which is 10% above. If we look at their net income margin, we can see it's quite consistent all throughout, except again for 2019 and 2020, which had a lower net margins. Now, their net income statement did fairly well. If we exclude 2020, their revenue growth is good and their net income averages is fairly good, although below 10%. But even with that, this is an X for my list. What I didn't like about this one is their net income started slowing down in 2016 onwards. They couldn't quite maintain their growth averages from 2012 to 2015. This in turn affected their overall growth averages even if we exclude 2020. Moving on to their balance sheet, we can see their equity growth is positive throughout the years, even in 2020, though it's quite low, only averaging 5.97%. So this is the only problem that I see in FLI. Although they always have a positive growth rate every year, it's quite low compared to their competitors. For MEG, they are growing around 14.05%. Ali, 14.93% 10-year averages for their equity. So for my list, we'll look at a growth rate of at least 10% or hovering near that. Though FLI's growth is always on the positive side and is really consistent in their growth, this is an X for me, quite not enough for my list. Again, this is for my checklist, since what we try to look for is at least 10% to consider it to have a good competitive advantage. Although their equity growth rate we can really see is in line with the growth rate of their income and revenue, still I want a bit higher rates for this. Next is their ROE. Now for their ROE, real estate companies doesn't really have high ratios for this. For FLI, their 5-year average is 8.05%. Now I would improve our ROE checklist. We would adjust the ROE based on their competitors and industry instead of just having a fixed rate for it, because ROE differs from industry to industry. So having a fixed rate for this is quite unfair for industries that really has a low ROE averages. Like for the real estate, it really is lower compared to others, because if you imagine how real estate profits work, they rely on the infrastructures they build to produce income, like the buildings, houses they build, which is generally reflected in their assets, while for tech companies which gets their income from users that use their services, it does not reflect to their equity. But be careful, you really have to compare apples to apples. Don't compare real estate companies to different industries. Whenever you compare companies, it has to be in the same industry. This way you will have an idea how well they are doing in generating net profits from their equity. Going on, if we check their competitors, FLI has a higher ROE compared to MegaWorld and Vista Land. Ali has the highest ROE of the four. With this, we can see FLI's ROE is doing slightly better compared to other competitors except for one. With this is a check for me. Now you can still continue on with 15% above ROE because this requires a bit work since you have to look at each of their competitors. And this one would be harder to do, especially for holding companies that has really unique set of businesses. Next, we check if their ROE isn't influenced by a lot of debt. We go to their debt to equity ratio. With this, we can see FLI has a debt to equity ratio of 1.43. We would still be following our guidelines for this ratio. We want a debt to equity ratio less than 2. With that, this is a check for our list. Next is their free cash flow. So this is again computed by cash from operations minus capital expenditures. We can see FLI's free cash flow is jumping all around the place. No consistent growth. This is definitely an X for my list. What I want here is for free cash flow to be consistently growing. Although on the brighter side, their free cash on hand has grown even in this pandemic. Next, let's check if they can pay out their long-term debt using their free cash on hand in just under 3 years. So we divide their long-term debt to their free cash. With this, we get 27.95. This means they will be able to pay their long-term debt using their free cash on hand in 27.95 years. So this is another X for our list. If we compare it to their competitors, Mega World can pay it in just 3.41 years, Ayala Land has negative free cash on hand, and Vista Land in 11.16 years. Next, we check if they are handling their short-term obligations well or their short-term debts. This is the current ratio. With this, FLI's current ratio is 3.10. This means they have 3.10 peso of current assets for every 1 peso of current liabilities. So what we look at is for their current ratio to be between 1 and 2. Although this is slightly beyond, it's still a check for me since it's not that far off. And we can see their income and equity is at a steady pace. Kinda slow, yes, which can be improved by using their current assets more to further expand the business since they have a slightly high ratio for this. Moving on is their price to earnings ratio below 15. With this, FLI's PE ratio is only 8.70. Really low. This means you are paying 8.70 peso to earn 1 peso. Just imagine, their earnings decrease so much but they still have a low price to earnings. We can see this company for this ratio is really undervalued. Let's take a look further. Their EPS in 2019 was 0.26. If we use that earnings, which was before the pandemic, their PE would only be 4.26. That low. Really undervalued. This is a check. Next, does the company pay out dividends? Now, FLI is a good dividend payer. They have increased their dividends twice in 2017 to 2020, but due to the pandemic, it decreased for 2021. But even with the decrease, their dividend still stands 2.79%. Their 2020 dividends is 5.84% for the price of 1.11. With this is a check for me, even for a dividend investor. I'm sure once their earnings goes back to the norm, they would still pay out their normal dividends. Next, does the company have a moat? What is its competitive advantage towards its competitors? Now, Filinvest is a really known brand in the real estate business and is one of the top real estate companies here. It is one of the oldest, if not I think the oldest real estate company since Ayala Land was established in 1988. Although Ayala Corp was way back 1834, either way, the two are the oldest real estate companies here. So its brand has stood against all the problems that our country has faced from the 1950s up to now. Their brand is already solid, but in terms of financials, they are quite lagging in growth. Although its growth is always in the positive, it's kinda slow, trailing behind the 10% growth that we want. So this is something you want to take in mind in investing in this company. Going on to their leadership, this company is governed by the Gochanan family from its chairman down to its directors and CEO for a very long time. Imagine, ever since way back, this company is still standing strong and is still growing with numerous projects ahead. Filinvest has received countless of awards throughout the years. With this, we can see even though it's an old company, it's still innovating and will still be growing in the future. With this, it's a check for me. Lastly, is it within my buy below price? My computed intrinsic value for them is 1.61. With a 30% margin of safety, my buy below price is 1.13. Its price right now is 1.11, still slightly below. With this, it's a check for me. With that, FLI scored 8 out of 12. Although they have a positive growth yearly, their net income and equity growth rate was still an X for my list because what we want there is for them to have at least 10% growth. So this one you have to take in mind while investing in FLI. Now my strategy towards this company, since it's one of my investment, is more on the dividend side to really get a good price for them to get that hefty dividend yield. So I am really strict for myself to not go beyond my buy below price. Since yes, they are growing yearly, but those are small growths. So if I pay a high price for its company, their growth may not be able to catch up to the price I paid for them. Luckily, their price really has gone down ever since last year. And this way, I would also get that 5% plus dividend yield and an amount of capital growth if the company goes back to its intrinsic value. Although its dividends was cut down hard this 2021, but I think they would go back to the norm after this pandemic, seeing as though their projects are still rolling on and the real estate portfolio is still heavily intact. Anyway, I hope you guys got a lot from this video. Do comment down below your thoughts, or if you have any information to share for us, would really appreciate it if you share it to us. If you haven't yet liked the video, click that button now. And if you still haven't yet subscribed to my channel, come on, now is the time for that. So see you guys in the next video.